Alrighty, what's going on, guys? Edward here, back with another video, and in this opportunity, due to so many requests, you have no idea. It all started by posting. I remember it was one video of talking about an indicator on how to replicate a paid indicator. It all started right there. I'm gonna actually show you, like, it's been for the past 90 days or over 90 days. I've been getting, actually, these are the videos that are getting most of the views. My channel intentions are, like, they were not focused on indicators at all. To be honest, I didn't think my channel was going to be about free alternative indicators, but I'm getting a lot of requests, a lot of views, especially this particular videos right here. And I'm getting a lot of questions all the time, like, do you have a part two, part three? And I know, guys, I get it. As I mentioned, these are just some alternatives that I decided to create. My channel is not fully meant to be for this particular thing, but due to so many requests, I want to give you something actually really cool right here, which is another indicator, another type of a strategy. It's an indicator. It's a free indicator. It's a free indicator you can find on TradingView, and of course, in a combination of a few things, we can create a plan. We can have a strategy here. And this is for all of those who have been asking me, can you replicate this other indicator? Can you replicate this other? I've been trying, to respond all of the messages from all of you guys. Some of the questions that you're asking me to replicate some indicators from, like, Lux Algo, some of them, they cannot be replicated. I am not able to find something free or an alternative that can kind of like replicate or mimic the actual move that the real indicator does, or the real paid indicator does. Okay, so to understand that now, so basically right here, what I want to do is I want to give you something that you can use, probably this tool, this indicators right here. They're all based on trending markets. Okay, all of the indicators that I have ever reviewed right here, they are all based on trending markets. That means that they are more effective when markets are trending. Okay, just like that. If you compare most of these indicators, they work best when markets are trending. Okay, and that's what I'm going to do today. So I'm going to show you an indicator. It's free. It's actually a couple of indicators that you can use. Actually, two indicators. No, as a matter of fact, I'm sorry, it's three. You don't need probably the third one because you can just remember. But you will need actually two of them. So the first one right here is called. Let me show you here. This is the actual name. One-sided Gaussian filter channels locks. This is the creator. Okay, this is the actual indicator right there. You're gonna need to stop the video at this point because I'm gonna show you the settings. You can pause the video right here, right, and get the actual picture. Okay, these are my settings that I'm using at the moment: 30, 15, 21, 1. This is the ATR, and just in case, have although you have actually the same. Okay, so you can pause the video right now, take a screenshot. That's basically it for this particular indicator. The next one is actually going to be the super trended RSI. Okay, this indicator, just like that, super trended RSI by Algo Alpha. This is the actual creator. Okay, once you add it, again, you're gonna have to tweak a little bit. These are the settings. Again, you're gonna probably need to pause or take a screenshot right here so you can have the same settings that I have. Okay, everything stays the same style. If you want to change colors in there, you can play around with the colors. Okay, but this is basically it. Now, what does this thing do? In combination of these two indicators, I want to show you that, like, again, you don't need it, but there's another indicator called time zone. What am I doing this? That means that I want you guys to focus. As part of this strategy, I want you guys to focus under certain hours. Let's say, I rather be trading during New York, during the fire hours of New York, the morning session, right? So, okay, I'm going to try to probably mark up from 7 a.m., which is 7 a.m. is still not New York opening. The New York session opens at 8, but I'm putting 7 like to just 1 hour before New York. Sometimes you can get actually really good setups 1 hour before the New York. This is a scalping strategy. All of these examples that I'm going to show you right now are based on the 5 minute time frame. You can go higher time frame. You can go 1 hour, H4 daily if you want. Okay, that's going to be, of course, swing trading, but my examples are based on scalping. If you like swing trading, you're going to have to test it out for yourself and see how it play out on the 1 hour, H4, daily, weekly, whatever. Right. So I'm using this indicator called time zone, just like that. Just go on here. And this is the indicator by MAGA tree, right? And once you have it, you're going to put 7 a.m. New York session until 11:30, around 11:30, or you can put midday probably right there. So click OK. And that's going to bring up a gray zone. Okay, that's for you. I want you guys to stick to trading only within these hours. If you see something else outside this gray zone, you are not going to be trading. Period. That's it. I don't care. You're not going to be trading. Oh, Eduardo, I don't like trading New York. I trade London session. Okay, well, you're going to have to probably figure out what time. Okay, and for your country is the New York is the London opening, so you can choose it, right? And then test it out. Okay. Now, how did this work? Very simple. Again, this is an indicator that works best in trending markets, just like every other indicator that I have reviewed on my channel. Paid indicators, free indicators, they work best on trending markets. Okay, now what's the deal here? Okay, simple. Right here, we're starting our session 7 a.m. and we wait for a signal. Okay, we wait for the indicator to give us the buy. Simple as that. The indicator will show you a buy. Okay, now you want to match this buy, right, with this indicator alongside the super trend on our side. Very important. Both have to be giving you buys. If this is red right here, like showing a red, you're not taking the buy. You're only going to be buying. You're only going to be buying if you have both on green. In this case, right? Both, everything is green right there. So you take the buy. This is going to be a 1 to 1.5. Okay. You want to make this strategy very effective. Make it a 1 to 1.5. Don't make it a 1 to 2 or higher. You can make it if you want. The cool thing about this indicator in particular is that you can choose, you can stay in the trend as long as the candles are still green. If you want, you can stay in the trend for as long as you want, for as long as you have green candles. If you're buying, for example, right? Now, as soon as you see that red candle, the first one right there giving you a sell, that's when you get out. Okay, so you have to be making the entry within my trading hours, within this specific hours. Okay, 1 to 1.5. If you want to continue holding, it's up to you, but you want to actually have most effective entries and targets, TP, all this stuff. Go to the 1 to 1.5. Okay, next day, I don't care whatever happens here. I don't care whatever happens here. I don't trade those hours. The next day, the previous day, I'm sorry, right here. Again, sometimes it's going to be choppy. I'm going to show you some choppy markets, some choppy examples. But right here, simple. Price was trending up. You can actually even mark up a trend, right? Right there to the upside. Price was trending up, broke. We are in New York session. Started to break. What time was this? 8:35 a.m. Then boom, you're getting a signal right here. Now, can we enter? Okay, well, make sure that the RSI is also in position. If everything is in red, go for it. That's the entry. The stop loss is going to go at that dotted line right there. That's the ATR. That's where the stop loss is going to be. Remember this entry right there? This is where the stop loss is going to be. Okay? And then from there you go on 1 to 1.5, or if you want to continue holding until that changes color, that's up to you. But you want to have the better chances on this one, go to 1 to 1.5. Again, look at this. There's going to be days where markets are going to be choppy. You are going to have losses with this. Yes, sir. So right here in this day, you're actually having a short position given in here. The stop loss was here, and the take profit 1 to 1.5, and looks like price actually reversed. Probably the spread got you out. You would have win probably this one. It just got very choppy. You see, it's not having a good trend right here. It's not probably going anywhere. It's just open down, open down, open down. Probably at the end it did end up dropping, but this would have been an ugly day in overall just because of how choppy it is, right? And the spread most likely got you out, right? If you were placing the stop loss just above that zone right there, probably the spread got you out. Let's say that was a loss, part of the game. Next day, you can practice this with every pair. Look at this. Very choppy markets right here. Very, very choppy. Price was just literally just consolidating right here. Let's say okay, 7 a.m. right here. You actually get a sell. You get a sell. Is it selling right here? No, it's actually green, right? So you're not selling. Let's see what's going to happen next. This one right here. Looks like it's giving you a little red. Let's see what would have actually happened. Hold on. That candle. Well, that candle is red, but right here we're still blue. Wait for the next candle. It's on the next candle where we actually start to turn red. So I don't know if you would want to take it on this one. In theory, we were not in red right here. So probably it's not a good. If you would have taken that position, probably if you place the stop loss above, take profit 1 to 5, 1 to 1.5, because the take profit is so short, it makes it very simple and very effective to hit your TP. This is why I'm saying, like, oh, you want to go all the way down. You never know how far that thing is going to go. You never know what price is actually going to do. So price reverse, getting you out before price actually crashing, right? So you want to have the best of this thing, go to 1 to 1.5. I know that's small, but test it out. As I mentioned, guys, test it out. This sell did not make sense because you are below. Oh, there's also a buy right here, by the way. You see how market is going already. It's pretty bad right there. Oh, you're getting a buy. Oh, what do you say here? Yeah, you do have a buy. Market actually give you a buy right there. Oh, hold on. Give you a buy right there. Your stop loss below ATR. Price never went actually on your way. Stop you out. This would have been a loss. That's fine. At least you stick to the plan, right? Price was green. Even though you know it's a bad thing right now. Market is pretty choppy, but you're taking the chances based on what the indicator is telling you. Again, another thing, I don't want you to be taking probably 6, 7 trades in the day. Just make sure you have these hours right there, and you're only going to be trading probably 2 to 3 maximum. Have yourself 2 to 3 shots in a day. So look at what's happening again right here. Price trying to push up. We're trying to go on an uptrend. So price pushing up, it gave a sell right here. You were on the red. This one went wrong. Short position. If you would have entered here, the stop loss would have been here, and 1 to 1.5, stopping you out right there. Then price pushed up, give you a bullish entry. You would enter, stop loss here. Hold on. This was the actual candle there, and a 1 to 1.5. So you had a win and a loss right there. Here. This one would have been very choppy, but nothing here. Price drop. This drop, we were in the red. Okay, stop there. 1 to 1.5. Yeah, this was a loss, but you would have to actually hold through the entire day. Sometimes even you see, sometimes currency pairs, they move very slow. This is just 18 pips. It took the entire from one day to another to just move 18 pips. You see, this is when you know markets are very slow in comparison. Of course, currency pairs in comparison to indices, which they move amazingly, you know, bullish. I mean, strong all the time. So you can continue like that, guys. You can stick to the 5 minute, 15 minute. This is a scalping strategy. Let's see if I can go into a different pair. I recommend you checking here and there some currency pairs. There are more, how can I say, the most common ones, the most used ones. If you consider that probably GBP USD does not move well during New York session, test it out during London. Okay, but again, this isn't a strategy. This is a strategy that it's a trending. It works best for trending markets. You see New York session opening, you're getting a sell, everything is red right here. You place the stop loss above, you can go with the trend. Not all the time is going to be like that clean. Sometimes even like this, you see, you did not get, when the price was pushing, you did not get any buy. Right here sort of broke to the downside and was giving you a sell, and that sell price actually ended up pushing up. So probably right here at the last minute, making an entry at the last minute probably would have not been a good option. So make sure to back test this, guys. Make sure to test it out. Don't take just my word for it and go all in. Let's actually see if we can go on higher time frame on the 1 hour. See if we can find probably some good trending markets. The only thing that whenever you go in higher time frames, you're going to be swinging. You're going to be swing trading right there, and those entries are going to take hours, to be trading. You can probably combine, if you want, another indicator, which is probably the 200 moving average, the 200 period moving average. So that way you're going to be trying to skip some positions. Like for example, this sell you see on a 1 hour, this sell we were in red, so probably would be looking for a sell right here, but you see price just immediately continue pushing up. I'm sure that if I add probably a moving average, like let's see, SMA, simple moving average, let's see if we can add the 200, we can skip some of these positions. So I'm going to try to add the 200. Yeah, number 3. Yeah, there we go. You see, this is the 200 period moving average. As long as we're above, I'm going to try to look for buys only. I'm going to skip. I'm not going to be trading the sells. I want to just look for the buys whenever I am above the 200. So that way, these little traps, these little manipulations right there, you're not going to be taking them, okay? And you're going to be looking for sells only, even though you're getting a sell right here, you're not going to be selling from there. You're only be looking for sell setups only when you are below the 200 moving average. So you can think about it. You can combine this and see if it actually works out for you, probably without this, right? But just like that, and test it out and let me know in the comment section how it goes. Does it work for you? Trading on the 1 hour, is it better for you only trading on the 5 minute or even the 1 minute time frame or the 15 minute? Just make sure that you see that you have bad conditions. Markets are going to be ranging. Whatever indicator you use, no matter what indicator you use, is it paid or free? Whenever it's ranging markets, you're not going to get anything. So think about it. All right. So this works for everything. So, but that's basically it, guys. Thank you so much for watching. Let me know what you think in the comment section below. Give me a big thumbs up if you like this type of content. And I will see you in the next one. Take it easy, guys.